Welcome back. Well, you're still tuned into Halftime Report. Well, it's turning out to be a session where we have the financials which are doing better. So we have the Bank Nifty, which is up almost 1% at this point in time. So it's showing a further amount of traction on the upside. HDFC Bank is one of your top gainers. We've been talking about that. That stock is up around 2%. But a couple of others, such as Axis, which is not in the news, but that stock is doing well. So it's up around 1.5% at this point in time. We have a couple of these IT stocks which are showing a bit of a mixed trend today. So Infosys, TCS are weak, but TechM is managing to hold up. And Hero Moto is really taking it on the chin this afternoon. That stock is down around 3.7% as we speak. Well, in terms of the broader markets, there are a couple of these pharmaceutical stocks which have been in focus. For example, Novartis, it was our story, Vivek's story, where Dr. Reddy's could potentially be eyeing Novartis's stake, that 70% stake that they have. And today, Biocon is in focus on account of a Jefferies note. So to talk more about a lot of these news pieces, we have Vishal Manchanda, who's the pharma analyst at Systematix Group, joining in. Vishal, hi, welcome to the show. The buzz around Dr. Reddy's and Novartis, we all know that they have a long-standing relationship in terms of a distribution pact. They've also bought a cardiac drug from Novartis earlier, that is Dr. Reddy's, for over 450 odd crores. So there is this underlying relationship that they have. So wouldn't an acquisition just make sense?
Right. So I think the deals earlier were more around the brands, and this time they are looking to acquire control in the entity, is what the news says or what the rumor says. I think acquiring control in the entity may not pan through, considering the valuations at which Novartis India is trading at today. If we kind of go back and kind of hear what Dr. Reddy has been saying about the valuations in the Indian branded pharma space, they have been pretty conservative. So they have said valuations are very aggressive and they would not want to go for an acquisition at such levels. So my sense is DRL may either go and look to acquire the Novartis India brands, but acquiring control in the entity may not happen, looking at the valuations.
Okay. Just on the valuation bit, it's around 32 times EV to EBITDA on a trailing basis, 7 times price to sales. And that's largely in line, yes, albeit probably on the more expensive side as compared to the other deals which have taken place. For example, Torrent Curatio has been in the same range as well. So what is it in terms of the valuations that you think Dr. Reddy's is probably a little apprehensive about, considering that the kind of deals available in the market are at these valuations?
Yeah, so most deals would be in this range. This would end up in the upper end of the range that we have seen deals happening. Only thing is, if you look at the brands that are currently housed within the Novartis India listed entity, these brands are not actually leaders within their categories. So what an acquirer would get is not brand leaders. So that's where there's a disconnect in terms of the valuation and the quality of brands potentially that a buyer would get. Hence, I think the valuations may be a concern here.
So what do you suggest would be, or what do you expect the future course of this be, and whether or not this deal happens, what's your call on Dr. Reddy's?
So I have a hold rating on Dr. Reddy's. What we are essentially looking for in DRL is to basically we are waiting for the other growth avenues to play out. So one of the most promising growth avenue for DRL is China, and other avenues where they're investing is basically an OTC business they're trying to build. So if you look at their spend, they have accelerated their SG&A spend in the last 1 or 2 years, and that's potentially to kind of give more strength to their branded business. So we would like to see how these growth avenues pan out, and then probably we would look to revise our rating. But until then, it is a hold.
At what price do you think your rating would revise? Basis what the story is right now, the valuations that are floating around in the market. Do you think you would change your ratings favorably if the deal was at this price? You're calling it expensive, or unfavorably? I mean, how does this deal change your projections for DRL?
I don't think this will meaningfully change because most deals, if you look at the in the branded pharma category, they tend to be EPS neutral at least for 1 or 2 years. So they don't tend to be accretive for most cases. Hence, probably I would remain neutral if an acquisition goes through.
Okay. All right. Just on that point, Vishal, the flip side is that why is a company such as Novartis or maybe a couple of these MNCs looking to probably scale back their operations a little bit? If you look at it, they have been divesting, their brands. They've also tied up this distribution tie-up with Dr. Reddy's, which probably resulted in maybe optimizing their workforce as well. So is there an issue where MNCs cannot really distribute effectively in the Indian markets, and hence we could probably see more such deals take place, maybe portfolio-wise, but an MNC probably selling off their brands to maybe a company which has more feet on the ground?
Right. So I think innovators have larger ambitions around the Indian markets. Branded generic is basically so they wanted to be in branded generics just because they wanted to get foothold in the Indian markets. But probably now they are kind of looking to scale the business much higher in India, and they would want to look at the innovator brands more than the branded generic business. Again, they have limitations in scaling up a branded generic business because they generally do not they generally rely on their parent for the brands that they launch in the Indian markets. So currently, if you look at most MNCs have two entities. The other entity is a 100% owned subsidiary wherein most of the innovator brands land into. And the existing generic business is probably struggling to grow because there are no new launches that these companies are able to make. It's getting into, so it's probably getting saturated at current levels.
Okay. Well, the other stock which is in focus has been Biocon. For example, Jefferies has downgraded the stock to underperform from neutral today. They say that with a week of, free cash flow generation, high leverage will hurt Biocon unless it looks at fundraising options like a stake sale in biosimilars as well as possibly Syngene. Something that the company has alluded to when it comes to at least biosimilars most recently. Do you think that's probably a trigger we can watch out for Biocon?
Yes, I would agree to this. A fundraise is extremely essential at this juncture because they have significant leverage on their balance sheet, while they also have aggressive growth plans. So to fund the growth plans, they'll need to kind of keep doing the capex. But the leverage will kind of limit their ability to do that capex and kind of build and kind of execute those growth plans in numbers. So I think if they're able to raise funds, deleverage their balance sheet, those growth plans can be executed with the capex that they intend to do.
What else do you like in the space now?
So we would prefer Sun Pharma among the larger names, and among the MNCs, we like Pfizer India.
All right, Pfizer and Sun Pharma, your top picks. A hold on Dr. Reddy's and a couple of triggers awaited for Biocon. Thank you, Vishal, for joining in and giving us a roundup on all things pharma. Take care. Take a short break. On the